Hello, and welcome to today's NinjaTrader ecosystem event, Futures Order Flow Trading. My name is Juanita, and I am the NinjaTrader platform representative here at NinjaTrader. Before we get started, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be sent directly to our brokerage team using the following phone number and email address. Lastly, if you are new to NinjaTrader, we do suggest you sign up for a free NinjaTrader demo with the real-time market data using the following link. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn the mic over to Blake and Jeremy, it's important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And if you'd like a full copy of the CFTC risk disclosure or you have additional questions, please use the link below. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thank you again for joining us. And without further ado, it's my pleasure to welcome to the room Cosmic Alerts with Blake and Jeremy. Go ahead and take it away.
Okay, awesome. So I'm Blake. Jeremy will be talking here in a few minutes. So today we're going to go over a little bit about order flow trading in our chat room, Cosmic Alerts. Okay, so a little bit about ourselves. We are a premium Discord trading room. We originally started back in October of 2020 as a options trading room. And around 2021, we decided to split the room into a options and futures Discord channel. Inside the room, we go over everything about trade plans, executions, and we also have live discussion floor and chat rooms. And in these chat rooms, we have voice channels and live alerts. So for an example, if you look over at the PowerPoint, today I gave a S&P short trade in the chat room as well as on voice, which you want to be able to hear me on the voice. So we took a S&P short at 47, and I was looking for a retest of the initial balance at 38. And I'm going to switch over to a chart example. Hopefully everybody can see this. The red dot is where I entered the short, and the green dot is where I alerted the exit for the short trade. At the end of the day, we also go over post-trade analysts as well as post our profits in the daily P&L section. That way, everybody can see what we do each day. We are 100% truthful in all of our trades. So if we have a losing trade, we will show our losers as well as our daily winners. That way, everybody can see how accurate we are. And just like everybody, we do have losing trades, and we just want to make sure everybody knows that we do as well. So we're not going to lie to anybody and be like, hey, you know, have 100% accuracy rate, because that is untrue. So I'm going to go over to the next trade to go over next chart, to go over a little bit about ourselves. Jeremy, if you could take it away.
Hey everybody, good to have everyone here. To introduce myself, my name is Jeremy. I've been trading since 2012. I began diving into dividend investing and more long-term growth stocks. My main goal was to just build, personal financial freedom like everyone else's. I started at a rather younger age. As soon as I was able to legally own a trading account, started investing, throwing my paychecks here and there, every now and then into my trading account and see what I could muster up, every month. 2014, I started diving into day trading options. I found it highly lucrative, but also there's some moments of downswings and that venture never really gets stale. And then it gets stale, and I wanted to dive more into options because typically we look for the next big thing, which is now in 2014 to 17. I started diving into option spreads, selling premium, looking into butterflies, call option, debit spreads, credit spreads, and things of that nature. And they were amazing for a while. Now and up until 2018, I was like, man, looking up all these spreads and these probabilities, options, it get really tiring and taxing. You just start looking at different names, every individual names, there's so much to keep track of. And as soon as I realized that you can start trading futures contracts or futures, to be in and out of trades intraday, you can swing them. And I found it to be completely life-changing because of, I didn't worry about theta. Theta decay was like a big problem, especially during, this naked options. Basically, you get the directional right, but then theta over time starts to decay at your contracts, and you probably lose money or lose out on those profits. And as soon as I found futures trading, it was again an opening experience. And now in 2020, or more recently, we founded Cosmic Alerts, and I haven't looked back since. And now on to Blake.
Yeah, so like Jeremy, I also started off in long-term investing, mostly with ETFs for my stock portfolio. So like QQQ, SPY, the Russell ETF. 2016, 2017, I decided to go into a little bit more of day trading and scalping. Sadly, I did start off with penny stocks and learned the hard way how penny stocks can be. And, that's about the end of that. I mean, penny stocks is penny stocks. 2018, I decided to get more into the future side of things with 3x inverses, TQQ, SQQ, as well as the crude oil ETFs. And I started swing trading those. Typically, I would hold them about 3 to 5 days and then switch. 2019 is when I began to really get serious into day trading the 3x inverses. 2020, during COVID, I was really good friends with Jeremy and Brandon, and Jeremy decided to take me a little bit over more into the future side and saying, hey, instead of trading the 3x inverses, why not just trade the future contracts themselves? So I got into that and fell in love with it and been doing full-time futures trading ever since. And in 2020, we decided to open up our own chat room, and it's been great ever since. Jeremy?
Yes. So now into the meat and potatoes of our seminar, order flow and how we use it with our system and with our methodology. By far, order flow is a cornerstone of our trading, and without this, we would not be able to make decisions based on our entries and our exits. And for most people, order flow has been a difficult concept to understand. There's a big kind of mystique around it where there's a lot of back and forth. But order flow at its core is a transaction between a buyer and a seller. And as a seasoned trader using order flow to base my decisions, I can say that order flow is again the very cornerstone of any market. Whether you trade CL, whether you trade the NASDAQ, the RTY, the ES, it doesn't matter, right? The order flow will be there, and can always be available to any trader. Now, order flow in general is where a buyer and a seller agree on a price, and that trade happens. Their orders may be 1 for 1, or they could be in hundreds to thousands. And there's nothing more else that is involved besides that. It is more of an agreement of a certain price, right? And that is the back and forth. And that's what gives us our auction, right? Or auction theory. Now, the order flows in question that we have, the first one is the volume by price. It is basically looking at total volume at a specific price horizontally. The time in sales, or I mean the footprint, aka the volumetric bars, are transactions happening in real time. They are specifically a very detailed explanation of what's happening within each candle. We take that and you apply it to our session, right? Because you could apply the footprint on any time frame. I personally use the hourly for the bigger movement, or the intraday price movement, and I could even dial it back all the way down to the 5 minute. Now, the footprint is basically a data series where it enables the users to see the bids and asks at a price. And again, it is the very detail of each candle. And without this information, it's kind of really difficult to tell what's happening, right? You could be going long at the high of a 5 minute candle, for example, where there could be several sellers, in line with that, or several sellers that are actively or aggressors hitting the bid at the very high of that candle. And you went long there thinking you might bust through, but there's a lot of resistance that you may not have seen otherwise. Now, this same can be said using the DOM. There's some sellers lining up on the DOM. There could be some really aggression, again, on the tape. You can see some transactions happening that are actively, hitting the bid when you're trying to go long. And it's difficult to see that. It's difficult to see that without, again, the detailed expressions, without the volumetric bars. And the DOM. I mean, I think everyone knows the DOM. And if you, again, the DOM is where we will see most of our liquidity in the market. It doesn't matter what equity you trade, right? For me, I like to use the NASDAQ quite a bit. And it shows you, the DOM will show you where's liquidity is currently resting, where active contracts are being placed at a certain price level. It shows us market orders hitting the bid and lifting the ask. All lots that are shown on the DOM are advertised prices, meaning they haven't hit the tape yet. They haven't hit the receipt yet. And this is important to know because it shows us who's in control, right? There is a lot of liquidity happening below price, and there's nothing above, right? On the DOM, right? There's a complete emptiness. So what do you think might happen, or what may happen is price might gravitate towards where liquidity is, right? There's a lot of liquidity below market. So there's a lot of people in anticipation of the market going lower, right? Or same vice versa, market might be going higher, and all you see are offers or standing offers above price. Market tends to gravitate towards liquidity, and that's where it may eventually go. But you can't really see that unless you have the DOM on you, at your disposal, kind of giving you a directional bias, if you will, intraday, because the DOM can flip. The DOM can flip in a heartbeat. That's where market turns happen, right? When these DOM flips happen. And last but not least, the time in sales. Again, I kind of went over this already, but the time in sales is transactions happening in real time, and what is taking place and how many contracts were transacted. On the next slide, we have over the volume by price. And here we have there's three big topics here, right? There's three big ones. You have the POC, the point of control. You have the LVN, and then the HVN. Now, by definition, volume by price is not exactly order flow, but it is essentially a really widely used tool with order flow to identify market structure and to find areas of interest, again, such as the order, like POC, LVN, HVN. Now the POC is where is the most contracts being traded. The LVN is a low volume node, where simply areas of the least amount of volume being traded, the profile. And the HVN is the other side of that, right? It's gonna be the high volume nodes. And they're interesting in that they have less volume than POC, but more volume than LVNs. Since they have more volume, they can typically mean higher probability of chop or back and forth action. And it's probably best to stay away from those areas to trade. You typically want to take trades that are within low volume, so that way they could be quick moves in and out of that area, because there's not many trades transacted in that area. There's a higher probability to markets to come out of that area, whether it's above or below, quite quickly. Whereas you want to trade at POC or trade at high volume nodes, there's gonna be more back and forth action. Now, I was going to see here on the chart on the presentation here, the identifiable zones. The orange line is going to be your point of control. The bottom blue line is the low volume node, and then the HVN is at the top. So those areas you're going to be trading in and out of, or trading through POC. You found balances at the LVN, or you can often find rejections at the HVN. Now, it's important to know here that this is developing in real time, and as the session goes on the RTA session as it goes on, and it's important to let that develop before you start taking trades. Typically, I wait about an hour, right, for the initial balance to unfold before you start to take really some serious trades. It's possible to trade before the IEB for the initial balance plots, but those are more areas where you probably get yourself caught in chop, and a lot of aggressive swings of volatility happen before that time frame. Whether it be you're trading through the news, or you're waiting for the first 30 minute quick range to plot, whatever it is. It's imperative to let the market develop first before you start taking trades. Next, first thing I do want to go over is the volumetric bars. Now, by definition, again, it's a detailed expression of a candlestick that you're looking at. It doesn't matter, again, what time frame you are looking at, but the volumetric bars can be set to any size that you would like. It's imperative to note that you have to, depending on your time frame, you have to make sure your tick size is just right for that certain time. For example, on this example here, this is a hourly footprint or hourly volumetric bar of the NASDAQ. And I purposely used a 40 tick range. And this is imperative, but this is crucial, because if you use, let's say, a 4 tick, you're going to get a lot on your chart, on your screen. And a lot of information, and it won't be condensed in a way that's easily legible. And you can't take trades when there's so much back and forth. It's hard to really find a condensed area you can take a look at. There's going to be a lot of imbalances all throughout your footprint. It'd be harder to find the greater imbalance, if that makes sense. Again, let's go over the volumetric bars here. We have, number one, we have buying and selling imbalances. Those are located on the chart again. If you notice, those pink or magenta lines, or those highlights on the left column, those are the bids on the right side of that column of the asks. Now, it's imperative on the left-hand side, on those magentas, but let's say at the top of these candles, you have these selling imbalances, meaning there is a greater amount of sellers happening at that price level. So lots of selling. There's more aggression there, so the deltas are skewed, most likely at those candles. There is some active selling pressure. Every time we've made a little bit of high, there's been some active sellers each time. Now, say on the other side are the buying balances, where on the right side of the column are the asks. And you can see these teal highlights, right? The teal highlights are going to be the buying balances. So every time you have aggression on the tape and aggression on the buy side, you have those teals popping up on your footprint. Now, it's important to know that you shouldn't take imbalances, by itself. By no means you should use them as a standalone indicator, if you will. Oh, I see an imbalance here. I'm gonna take my short. I'm gonna take my long because there's a imbalance right here. It's easier said than done, and there's more confirmation tools that we like to use here at Cosmic to confirm that bias. And I think we'll go over that later, but it's imperative to know that it's crucial to know that nothing should be taken, by itself. There should be also some confirmation, or at least two more things that will not carry you through the trade, but will give you more confidence in that trade. And number two, I want to talk about completed auctions. So typically, when there's a completed auction, you have there are some zeros at the tops and the bottoms of the candle. Now I have mine set to show a blank space. You might see on the bottom right corner of the footprint, there's a blank space there. There's a blank space where the top of the bit should be. That means there's a zero. That means there are no more sellers at the top of that candle. Now, sometimes it could be a good indication that there's no more buying or no more selling pressure at that level. It can be also shown at the bottom of the candle as well, which I can show later. But usually the bottom of the candle, there's a completed auction. That means there are no more sellers trying to get into the market or trying to short that market at the bottom of the candle, or there's a zero at the high, and there's no more sellers. Yeah, some more sellers, or some more buyers at the top of that candle. Another way I like to use the volumetric bars is the faded volume. So the faded volume, when you're constructing, you can also put volume on the volumetric bars itself. Now, because of these are showing how many offers or how many bids are there, and asks are there on each candle. You can tell how price is moving through there, so that if we were pushing higher and higher, and the volume is getting thinner, like for example, on the middle green candle, volume is getting progressively thinner. Like the candles are getting smaller, the volume is getting thin. The POC of that candle is a yellow highlight on the left-hand side, which is showing 999. That's a POC of that candle. Now, you also saw a sell imbalance happening right at POC of the next candle. So up against POC, we have a sell imbalance is at 355 against the 98. That is a sell imbalance against previous candle POC. And that is a faded volume there, right? You have a rejection of that POC from previous candle. The volume is fading at the highs, meaning there's no more interest happening, no more buy interest happening at that level. And now it is presumed that we could possibly take a turn. And this is exactly what the market did. We saw faded volume at the high. You could not get over previous candle POC at that level. We saw a sell imbalance. For me, that would be an indication to start looking at shorts. Now I can use it as a small time frame. So this is off the bat again. This is the hourly footprint. So this is where I start to begin to look for my trades up against, let's say, buy area high, up against a high volume node or a low volume node. Sorry. We're looking at other structures intraday. Whether it be the IB high, it could be a 30-minute opening range high, whatever it is. If it's up against those levels, and you see the footprint developing action around that price level that you're looking at, that's where we start to look at the trades, right? The footprint tells us where to trade, and then you have the DOM, the tape tells us when to trade, right? Now these four components, I didn't include the last one would be the up against pocket development on high candles, but the four components will often dictate our short-term bias upon entering the trade. Now for these imbalances, I will also note that by default, it is typically set to 150% or 1.5x. I set mine to 400% at the minimum. So now that at least 400% more directional, either more buyers or more sellers are transacted, right? So I want 400%, which is a glaring amount of either buyers or sellers at that price level, right? I want that to be standing out to make it completely obvious that there is a large amount of trades happening in that area, right? And it's an imbalance. You also start to trickle that in and even add even greater imbalances to like 650 or 800%, but you probably won't see that much ratios or that many imbalances happening forming on your chart. So you have to be considerate and also not to extend that percentage too high, right? So anywhere from 400 to let's say 600%, it's a ideal sweet spot. Next is the depth of market. So, okay, the DOM, which is again another cornerstone of our concepts, what we use at Cosmic Alerts. Key points here: the concept of order flow trading originates from the DOM, and one of the most important set of data points when deciding to put on a trade. And it is by far the best source of order flow information. Can even be used almost independently. Say almost, because people trade off the DOM solely alone, but it's really fast in and out trades. When deciding to place a trade, whether I am looking at imbalances or completed auctions on the footprint or faded volume in LVNs, I am always referring to the DOM to see whether or not I am buying with buyers or selling with sellers. It is imperative that this needs to be your backbone of whether or not to place a trade. Whether you want to get in on the move, you want to get in on the move, okay, with the move and not against it. Now, an example of this, again, take a look at the slides here. This is the DOM of the NASDAQ. This is where you can see stacks or resting offers, resting bids, or you can see pulling and stacking of bids and offers on the DOM itself. You can also see when market orders are hitting the bid or lifting the ask. Now, the DOM can be used in many ways. For simplicity, it's better to look at resting liquidity or resting offers and resting bids, because I'll give you more of directional, right? A directional move. If you want to get long, it's imperative to have some activity higher, right? You want to have a lot of interest, right? The advertised price is above to showing you that there's liquidity there, thinking that price will get there, right? People will start placing orders there or start putting sell orders for being long from earlier, right? You want to have, there's gonna be some law of attraction, right? There's some liquidity above, market likes to go towards the most areas of liquidity. Now, it is much easier to play the ES, for example, than the NASDAQ, looking at the DOM, because it's a higher liquidity market, right? You can see a lot more resting orders on the on the bid and ask. For me, I played the Nasdaq a lot. There's always going to be a differential between how much aggression is happening. So for every market, you have different liquidity guidelines, if you will, and it can only be done by watching the DOM, and watching the data, how many orders are going through. Because the Nasdaq is so thin, it's a thin market. You're not going to find orders no more than typically than 100. And it's sad to say it now, but liquidity now has been way different for the past 2 years. It's been fading, right? And on the DOM, you can just tell that. Like, you don't even have to look it up. How's market liquidity doing, right? From just 2 years ago, on the ES, you would have a minimum of 300 on the bid and ask at all times. At each level, you have standing liquidity that's like 1,000 plus. Now you don't. you barely see that. It's pretty rare. You might have some spoofs here and there, but it's hard to find and now's the other to really identify what those trends are, right? Now, big liquidity on the ES could be 500 lots, right, at a standing resting order. It could be 500, 800. On the Nasdaq, for example, if you're no more than 100 at a time, it's very little. You might find 100 here and there, but it doesn't happen often. Before it used to be 300, 200 now, but liquidity is fading, and that can be seen on the DOM. Next, we have the time in sales. Now, it is important with how time in sales works. It's a very fast moving instrument, extremely fast. You don't have to technically read the tape. You're looking at every single digit that goes through that market. You're gonna have a really difficult time in trying to actually read it, right? Oh, there's 10 lots here traded, there's 5 lots there traded, and it's so fast back and forth. It's hard to make a decision. However, you don't have to read the tape. You can have set parameters within NinjaTrader to highlight key moments on the tape, telling you what is happening, right? For example, highlights of green and red could be indication of large orders hitting the tape. You can use certain colors to exemplify below, or people hitting the bid, below bid, or people hitting above ask, right? So below bid or below ask, which is a key one for me to use a lot. Again, we are looking at time sales, particularly, we're looking for indications of buyers aggressively hitting the bid to get out of positions or covering. And likewise can be said for sellers covering, hitting above current ask to get out of their short positions. Now, this is a crucial concept to understand because I have these highlighted. And all I have to do is look at the corner of my eye, essentially, to look at what's happening. These are color coordinated, right? The magentas for me would be like large sellers or people trying to get out of the market, right? They're hitting the bid. And then you have, let's say, orange would be trying to getting out or getting into the market. Now, these are highlighted. You can see the chunks in your tape, in your timing cells. You can see chunks of it going through. And that, to me, is indication, or is to give more information to utilize during your trading, because you do not want to get into a long position when there's a large amount of sellers, like or magentas, hitting the tape, right? So kind of give you a visual representation. You have markets going up, and you have a large lots of aggression hitting the bid side, trying to get out of positions. And the tape will tell you that, right? The DOM just gives you an area of reference, like what areas our targets might be able to hit next. You want to see like, oh, there's some standing offers above. I might not want to be long just yet. There's some standing liquidity. And when price hits that level, we will look at the tape to confirm that bias, whether people are going long there or they exiting the market there, right? because we don't know what's happening on the DOM, right? Exactly what's happening. There's a lot of, I don't know, back and forth. There's a lot of advertisement of prices, high or low. And it's only up until when price hits a certain level that we're looking at, right? It could be lined up with the DOM perfectly, but we don't know what's happening at the exact price level until you look at the tape. And tape reading is one of the most oldest forms of analysis. It should be taken into consideration, before putting on or taking off the position. Now, might be moving really fast. People say read the tape all the time. Read the tape. But you don't have to read it. Again, like I said before, Ninja does a really good job of giving you a lot of options. So how you want to color coordinate your time in sales. And as long as it makes sense to you, what colors did you like to use to coordinate this? But all you have to do is kind of read that, right? Just read the highlights. And we start understanding those, how to read these highlights. If you're getting into these block traders, there's a lot of, let's say orange hitting the tape. Orange, I'd say orange for me would be, lifting the ask. So a lot of longs trying to get in or trying to buy above ask, right? Getting above ask price. The tape can also signify, or can also tell you when there is a lot of absorption. So absorption, we determine a lot in the room. There's an absorption of buyers or absorption of sellers happening. Where today, for example, at the end of the day, we had a large absorption of sellers coming at the lows. Now, sellers are trying to bring the market down, but it's being equally met with buyers. And on the tape, there's a large blocks of selling happening at the lows, but then equally met with buyers, just gobbling all of them up, right? They're taking everything. So you have to understand, there's going to be some sort of, of pushback, but there's going to be a moment where it's going to give away soon, right? In either direction, right? But these can happen, simultaneously, and you have to be at the right time to enter those positions. And it's critical that you read the tape to understand those concepts and how we use them at Cosmic Alerts. Which we will get into momentarily. So we have, order flow trade ideas. So again, we look for imbalances. Looking at typically on the higher time frame, would it be at the hourly or even the 30-minute? Once you locate those imbalances, we will look for price continuation along with those imbalances, whether it's either long or short. Look at the DOM, look at the tape. If it's within the directional bias, we will seek to enter trades very soon, right? If it's very fast, the market is very fast, and maybe the same wavelength, right? You want to be in the moment and be present when these things happen. There's no indicator out there that will tell you exactly when, right? Because what's happening so fast, it's almost intuitive. If you're reading the tape and understanding the DOM, it's very instinctual, right? Once you have a good understanding of what's going on with order flow, it makes it a bit easier to enact on those impulses, right? When you take longs, when you take shorts, when you exit, things of that nature. After looking for imbalances, you look for a few things, right? Either is it up against value areas? Is it against, are you on top of POC? Are you trading above POC? Are we trading underneath its high volume node? Are you in between that? Are we up against, let's say, the initial balance high, low, or the mid? And or you use the cosmic pivot as a source of confluence, right? I find that when our indicator, the cosmic pivots align just right with other levels like the value areas, those are areas that I like to use as big confluences blended together, right? like I should definitely start looking at trades at these areas, particularly because they will have the most potential to take a trade, right? These are areas that we already have confirmed, looking at historical data, looking at previous days. We have confirmed, these are areas we're going to trade at, right? So the volume by price, the cosmic pivots will tell you where to trade, right? And then the order flow again will tell you when to trade. Here at Cosmic, we like to use the what's known as multi-time frame analysis. Now, we're never really trading off just solely the 3-minute chart or the 1 minute or the Renko, or solely just one single chart only. We look at the overall also bigger picture, and that's also how you start to look at that's look for bigger moves as well. But you want to be looking at the higher time frames first. You can start back looking at first at the dailies to see where we're at, globally, and then trickle down to the hourly, which is also how to use that. Most of us, or to use for the bigger moves for the day within the hourly footprint, where you can find a lot of rejections at the highs and at the lows. Look for these big impulses in one direction. And if it's a choppy market, that's okay, right? These bounces will kind of lead us the way as well, and bounces and the down will lead us the way. Could be more range bound, but when there's more range, there's more opportunities where there's a lot of interest happening back and forth. So it doesn't matter if we're trending or if we are range bound. It's imperative that order flow will always give you an opportunity to trade. Doesn't mean we should trade and chop, but it's important that it's so possible is to be more cognizant of when to take your exits, right? Or where to take in and when to take your entries. Now going along with the DOM again and going over the tape, you want to be in with buyers going long, you want to be in with sellers going short, and nothing else can tell you that besides order flow. Now the tape is your indicator, especially when you're trying to get into a trade looking for continuation. You want to look for large size, lifting the offer, or size hitting the bid if you are short. The flow of orders in your favor is protecting your position. Again, so the flow of orders in your favor are protecting your position, right? Now, failure to maintain those levels once passed is an indication that you may want to start looking to get out, right? Now, even before taking the trade, like you have to know what's happening within the DOM. There are large bids supporting the downside thesis, and are asks supporting the are there asks supporting the upside thesis. One way to look at the DOM, front DOM pressure or volume being put onto each side. If there is an uneven stack, then there is no trade, right? If the stack is even, typically for me, I see there's a bid and ask that are dead even. There's no really aggression. There's no liquidity. It's a glaring in either direction, then I shouldn't trade. Okay. And we go over these ideas more so with the cosmic pivots that Blake will go over momentarily.
Okay, I think it's my turn. Okay, so a little bit about the cosmic pivot indicator. It's a deviation of the traditional pivots. Okay, so what I mean is it's the traditional pivot indicator. However, it's using a different calculation method to define the levels. The calculation method was created along with experience using the order flow to help diagnose the breakout zones and areas of strong supports and resistances. Therefore, the higher the calculation period, the greater likelihood that a level would be a strong area of confluence. So therefore, you have daily, weekly, monthly, and yearly levels on the pivots. If you're looking at the chart image here, I'm using a NASDAQ 20K volumetric chart here. Like I said in the chat room, every image is going to be based off of the month of August. The image grabbed here is from August 1st to August 5th, and it's covering the weekly and monthly and daily levels here. So as you can see, the dotted line right here for the R1M middle pivot is for the monthly level, and the pivot point down here is for the weeklies. So here is a monthly pivot, here's a monthly pivot, and everything in between are daily pivots. The way that we use the cosmic pivot indicator along with the bid and ask candles is so we could see inside the candle when we hit one of the pivots. So right here, you can see at the R1 monthly pivot right here, we rejected, but if you're just looking at the candle, you don't know if we're going to continue going above or beneath. So therefore, using the bid and ask candles, you'd be able to see if there is any trapped sellers or buyers right here at the top of the candle, as well as imbalances, and we would therefore enter a short trade. On the next slide, I'll be going a little bit more in depth into trade ideas. So right here is another chart example from August 1st up until August 12th. You can see here that we rejected the monthly pivot again at 528, which would have given a huge short signal on the NASDAQ. You could just, the picture reference here is mainly used just to show how well the market adheres to all the levels. The monthly levels, daily levels, and weekly levels are all plotted based off of the time period. So therefore, the monthly levels will replot on the first trading day of each month. The weekly levels will replot on the first trading day of the week, which is typically on Sunday at 6 p.m. Eastern. And the daily levels would be the same thing, Sunday through Friday, or Sunday through Thursday at 6 p.m. Eastern. They'll replot. So therefore, you'll see the levels before the day even happens, and you'll be able to use your trade plan adheringly to the levels to see where you would like to see a strong support or resistance level. Right here, you can see, I'm not sure if you can see my cursor circling right here. We have a monthly pivot as well as a weekly pivot and a daily pivot pretty much all close to each other. So you know that that's going to be a pretty decent area to possibly enter short. So what you're going to do is prior to the day starting, you'll see all these levels right next to each other, and you'll be like, okay, so you could get your highlighter tool out, go and highlight right there and be like, would be an area that I'll look for a short entry. And then using your bid and ask candles, you'll be able to use that to define your entry. Let me go over to the next chart. So here's a trade strategy that you can use with the cosmic pivots. And typically I like to use this within the first 15 minutes of the market open, or depending on, since I don't really prefer time-based candles, I prefer using volume candles, because it's all about how much volume is trading inside the market that day. If it's low volume, less likely that there's going to be a huge breakout. You're most likely just going to trade sideways during the day. So here's the S&P. I believe this was taken on August 1st, August 2nd, I believe this trade was. So above here on the chart, I'm using a 50K volumetric candle. And the way that I would look to do it is if we break above the first 50K candle, you look for a long entry idea. And if we break below the 50K candle on the next 50K, I'll be looking for a short idea. So as you can see right here, using the daily pivot levels, we have the 50K candle broke out right here for the first entry, as long as using the daily S1M pivot. So right here, you would be looking to take your first entry long, which was about 5-7 minutes after the market opened. Then what I would typically do is, since I typically trade about 3 to 5 contracts for my order size, if I entered here at S1M pivot break, I would look for my first scale exit right here. Now, however, if you did not get into the first entry, you could always go second entry long, break at the main pivot level, and then go long up until resistance, which would be R1M. So if you took the first entry here, you would scale here and then scale here. However, if you took the second entry long, you would enter here and then scale here. Now, there's another way that you can do this is, I call it the predicted move, which is the, sorry, let me just drink some water. Okay, so I call this the predicted move, which is the distance between two pivots. So for example, I'm going to take the distance between the pivot point here and R1M here. So as shown, R1M is 41.38.25, and the pivot point is 41.19.17. And the difference between the two is 19.08, which means you could get about 19 points from entry to exit, or 76 ticks for those who trade off of tick based and not off of point based. For the 50K volumetric candles, I do the RTH session. So therefore the first candle will only plot at market open. I typically don't look at Globex other than for the calculation of the pivot points, and to possibly look at some resistances here. So you can see right here, we kind of rejected the overnight session a little bit, but I primarily focus mainly on the regular trading hours. I'm not sure, Juanita, how much more time do we have on the webinar?
Yeah, we actually are running over just a few minutes here, so I can
Okay.
probably give you guys about 5-8 minutes left to go ahead and close out.
Okay. So somebody in the chat asked about a example of a trade today. Since we made the PowerPoint for the presentation during the month of August, what I could do is, if I go back a few slides when I gave an example, whoops. So this was recent. So this was today that I put in here. I alerted in the chat room that I took a S&P short at 47 at 2:39 p.m. So if I go and pull up the other chart, if I could scroll out a little bit here. So 2:39 p.m. would be about this red dot right here. Okay. And I was looking for a retest of the IBH, because previously, the last time we broke out of the IBH, we came back, retested the initial balance high, and then continued to fall lower. So I figured right here, since it was also the previous high, likelihood of a retest of IB was a pretty decent amount of percentage. So I took a risky short entry right here with a tight stop loss, just a few ticks. I think I was risking 6 ticks on this. So I took the short and I scaled out for 5 points, and then my final exit ended up being 7 points, because as you can see, we did not retest the IBH right here. I guess we could just go ahead and open up the Q&A if anybody has questions. Humphrey, so yes, 2:39 p.m. Eastern time was the short on ES. We do have a YouTube channel that goes over a couple order flow videos. We're not really active on it, since we do live trade in the chat room, and we do have Jeremy live streaming his screen, so you guys could see his charts every single day, and as well as when he takes some trades, you could also see that. Humphrey, I'm a little bit confused what you're.
So
IBH stands for
IB6.
initial balance high. So the initial
Correct.
balance is the first hour of the regular trading session. If the price broke, why don't take a long retest? It just wasn't in my trade plan. I was mainly focused on entering short trades today. So therefore, when we went up and retested the high of earlier inside the session, and we previously rejected the break of the initial balance, I decided just to enter the short with a tight stop loss, and the trade ended up going 7 points, which would be 28 ticks, I believe, in my favor. The trigger for the short at 239 was a reject of the previous high of the day. I believe it went a few points over, and I just looked for some more continuation in my favor before entering the trade. I think we went up to like 54 before I ended up entering the 47. Yeah, we did have a daily pivot at 39.55 on the cosmic indicator. And I'm pretty sure a couple of members in the chat room were able to grab that short. I know Andrea was one of them.
Yeah. So it's fantastic that we do this on a daily basis, right? We are live every day, giving live trades. And now there's many ways. I mean, upon entering, there's many explanations as to why we take the trade, and during the trade, like upon entering, we always give our reasonings why we get you enter, and what's our stops or what's our targets. And sometimes, we are trading above pivot areas, like kind of in this gray area, like we missed a long opportunity, against I'd say IBH, right? We missed that long. Where can we re-enter to get long, right? And one of those things comes all the time. I'm gonna miss the move. I'm gonna miss the move. Well, it broke out of IB as it soared higher, but then the overall market consensus was short, right? It's kind of hard to when you have that bias. Like, we ended relatively strong, but there's a lot of short covering, right? I'm not sure I can say that, to 100% extent, but there's a lot of covering at the lows, right, today, at the very end of the day. And using order flow, like we can distinguish, if it's a good time to, re-enter along with those short coverings, right? Sometimes they short cover and take it all back, right? But it's imperative that even if you're trading above pivot or between pivot levels, it is crucial to still see order flow and what it has to offer, right? If you can even re-enter to go long, or can you fade this move higher, right? And without that, you should be guessing, especially in between pivots already, right? If it fades between pivots and like, oh, I should enter short there, you know what I mean? How would you have known, right? And I think order flow gives us a better backstory and to give us a better insight as to when to take a contrarian move, for example, or trying to get into a turn or a continuation.
Secreta, so you could go to our website, which is cosmicalerts.com. I'll post it in the chat here again. So you could go to the website and just scroll down to the membership plans, and you could go based off of which pricing structure works best for you. We do have a discount code for our webinar today, which is Cosmic Ninja 40. Which is 40% off the first month. This coupon code does expire on September 15th. So if you are interested in using it, please use it before September 15th. So if you do use it after September 15th, it's not going to work, but we do have a ongoing 20% off coupon code for first month people at all times if you do happen to decide to sign up after the 40% off coupon code expires. For anybody interested in joining a futures trading combine, we are partnered with Apex Trader funding. And they do have, they did give us a coupon code to give out during our webinar today, since they are a vendor for NinjaTrader. So if anybody would like an 80% off coupon code for that, the coupon code is, I believe, let me get that again. Cosmic NT. Okay. Daryl, so they are a proprietary funding combine company. So therefore, if you're not able to provide your own capital, they provide the capital for you after you pass a test. So which is the combine. So you have to, it's a monthly fee structure where you pay them a monthly fee, you hit the profit target for them, and then you'll get funded with capital.
Yes, so real-time alerts and learning. So we have discussions all throughout the day. At the same time, we have real-time alerts. As in, upon entering a trade, we'll immediately say when we are in. We'll also say and type our stops. And it's imperative to also know your targets as well. So you're not just looking for your objectives, right? You want to know what we're looking at as well, and to give you an understanding, to confirm also your move as well. That doesn't mean you have to take every single signal, but it does really help to have someone confirm your biases, especially on the same side, right? It's like, oh well, I'm thinking of going long. Oh, I think I should go long too. And then the whole room has that consensus. And I think it's a good indication of let's take this thing together, right?
Yeah, so as Jeremy was also saying, Ramez, is primarily we are an alert service. However, our main goal is to not have everybody just rely on us for alerts. I know it's kind of contradictory to what we are as a service, because people pay us for us to give them alerts, but in the long run, people aren't going to be profitable just relying on Jeremy and I. So our main goal is to teach you how we read the order flow, price action, and everything. And we will give you the every single time we enter a trade, we'll be on voice, streaming our desktop and in chat, be like, hey, we're going to go long here, we're going to go short here, and then we'll mention that entered long, entered short at the price that we entered. And then we'll also say when we exit or scale. However, everybody's risk tolerance is going to be a little bit different. So I might, I might be trading more contracts than somebody else. So therefore their risk tolerance has to be a little bit different than mine. So if my entry is one level and my exit's one level, it might be beneficial for you to get out before I get out. That way, if you're trading a smaller account.
Thank you again to Cosmic Alerts for taking the time to share with us today. We hope you'll join us in future webinars. I'd like to remind you the information provided in this was that of Cosmic Alerts and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see everyone in future webinars. Happy trading from the NinjaTrader ecosystem. Thank you again, Jeremy. Thank you, Blake. We enjoyed having you in the room. And thank you to everybody for your attendance.
Thank you. Thank you for having us.
Thank you for having us.